The global luxury markets boomed over the last 2 decades. Nobody seemed safe from the glitz and influence of runway trends. Well, most of them. Shoppers helped the sector almost triple in value during this time. But recently, things haven't been looking so rosy. Take this site in Beijing. It was supposed to be the city's hottest new destination for European high fashion. Instead, it's symbolic of an unfashionable new trend.
What we're experiencing is something that China has never experienced.
It's impossible to keep growing. According to the analysts who we interview, a lot of them believe that this is the end of the China luxury boom.
The Chinese market's been one of the growth engines of the world's luxury industry. Sales swelled into the tens of billions of dollars. Now look at this chart. This is North America and this is Western Europe, each smaller than Asia's slice of the 2023 global revenue pie. Like so many business trends though, the pandemic heavily influenced this, and here's why. In 2019, about 2/3 of all luxury goods bought by Chinese shoppers were picked up outside of China itself, through travel to hotspots like London and Paris. But when COVID-19 closed the borders, a lot of that shifted inside China. That's why this happened. Luxury spending in the country surged from 2020 through 2023, exposing the luxury industry even more to the Chinese economy, which is now looking shaky. And that brings us to the present day.
We saw a slowdown and a contraction in the global luxury market. About 50 million people either opted out or were forced out of the luxury market over the past 2 years.
European luxury brands including LVMH, Kering, which owns Gucci, as well as Moncler and Burberry, shared hundreds of billions of dollars in market value in 2024. LVMH, the world's biggest luxury stock, and whose unfinished Beijing stores we saw earlier, recorded its worst annual performance since the global financial crisis. So, what went wrong?
The most direct reason is China's economic slowdown, which has been triggered by the property market slump.
Chinese consumers have been, looking at real estate as a vehicle for wealth creation.
And we have seen that a lot of middle classes' household wealth has been swept away by the property market crisis.
Then there's China's high youth unemployment rates. Aspirational young professionals have been key sources of growth for luxury brands, with more than half of China's wealthiest shoppers in recent years born after 1990. Their rising rate of unemployment, represented by this white line, is much higher than the national unemployment rate shown by the gold line, posing another major obstacle.
A lot of the aspirational luxury customers are now tightening their belt and are less willing to spend on big-ticket items.
So let's dig into this for a sec.
Hello, everyone.
Hello. 10 years ago, while working at JP Morgan, 35-year-old Zhuling Chen began building an influential following on Chinese social media,
大家好，我是猪猪。
blogging about fashion and lifestyle.
I connected with a lot of the designer fashion brands. A lot of them are international brands. They wanted to enter China market because Chinese consumers just buy everything,
By 2019, Zhuling decided to leverage her social media popularity. She quit her job to start her own business.
Most of the time I spent, I was doing e-commerce operations and live stream sales activities. E-commerce sector was growing really fast in China. There's so many bloggers promoting products. So I do feel people started to get tired of purchasing products and realized that we just bought too much and it didn't really make us happier.
What she saw was a trend amongst young Chinese away from wanting to own things and towards experiencing things.
My readers, they wrote me messages saying that they pay more attention on mental health now, and they're trying to explore themselves versus just be an elite, have fancy jobs, and be a successful person. And then I shifted the business model into hosting wellness-related workshops, events, and retreats.
Many companies have benefited from young Chinese consumers choosing experience over extravagance.
They're more here for maybe taking photos and not necessarily translating completely into luxury purchase.
For instance, athleisure giants Lululemon and Arc'teryx, their annual sales on China's Tmall e-commerce platform have soared in 2024. And then there are so-called dupes, which are basically high-quality knockoffs, which thrive on e-commerce platforms.
A lot of consumers are moving into buying these dupe products because they think, okay, it looks the same, and they probably don't want the logos anyway because they want to be more low profile, and they can buy it at much cheaper prices. So, this trend is taking off in China massively.
Unless you see the price tag, playing spot the difference is hard. Original, dupe, original, dupe, original. You get the idea. But there's something else, though.
President Xi Jinping really has this idea about, common prosperity, which means he wants, people to be relatively equal in terms of wealth and, social status. And this has really deterred a lot of wealthy people in China to flaunt their wealth. And that's affected their appetite for luxury products.
So brands are shifting direction, targeting their most spendy customers.
A lot of luxury brands are now shifting their focus to focusing more on their VIP clients, who are the richest group of people who can still spend. For example, they are opening exhibitions, and they are hosting fashion shows, and they're even hosting concerts just to attract the younger Chinese consumers.
So the party might be over, at least for now, with China's era of extraordinary growth ending, and those unfinished flagship stores monuments to this new normal. Sales in the world's number 2 economy will most likely remain depressed in 2025. Companies like LVMH are turning their sights to places like India, the Middle East, and Southeast Asia in the hope they can make up for some of the shortfall.